Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's time to dive into the chaos and opportunities of today's market action. We've got a lot to unpack, with geopolitical tensions shaking things up, major indexes taking a hit, and some standout movers in the large cap space. So grab your coffee and let's break down what matters most for us long-term investors while keeping an eye on the short-term noise. First up, let's talk about the broader market. It's been a rough day across the board, with all major indexes sliding into the red. The Dow Jones dropped significantly, shedding close to 2%, while the Nasdaq took an even harder hit, down over 2%, as tech stocks felt the pressure. The S&P 500 wasn't spared either, falling about 1.7%, and the Russell 2000 mirrored that decline. What's driving this? Well, the ongoing conflict with Iran is spooking investors big time, pushing volatility up, with the VIX spiking over 13%. For us long-term players, this kind of pullback can signal a buying opportunity, but we've got to stay cautious with these geopolitical headwinds in play. Zooming in on the S&P 500, we're seeing a market that's down roughly 8% from its highs, and some analysts are warning that tighter financial conditions, especially with oil prices soaring, could mean more downside risk. But here's the flip side. Earnings forecasts are still holding up, offering a bit of a cushion. As long-term investors, this reminds us to focus on quality companies with strong fundamentals that can weather these storms. Over on the Nasdaq, it's officially in correction territory, and this week's steep losses are largely tied to fears over the Iran war impacting energy costs. Tech stocks, which have been a darling for growth investors, are getting battered. But history shows us that tech often bounces back after these dips, especially with historical patterns suggesting a potential recovery soon. Keep your watch list ready, folks. This could be a setup for the next leg up if tensions ease. Now, let's touch on the big story driving sentiment, the Iran conflict. Oil prices are surging past $110 a barrel as restrictions in the Strait of Hormuz tighten supply, and this energy shock is rippling through markets. Consumer sentiment took a nosedive in March, with fears of higher gas prices and inflation hitting household budgets hard. Analysts are even tossing around the term stagflation, reminiscent of the 1970s, as a risk if this drags on. For us long-term investors, this means keeping an eye on inflation-resistant sectors and maybe even gold as a hedge. More on that in a bit. Shifting gears to some bright spots, let's check out the large-cap gainers. Despite the market gloom, we've got some standout performers, especially in energy and precious metals. Companies like Energy and Halliburton are riding the wave of higher oil prices, posting solid gains today. Wheaton Precious Metals and AngloGold Ashanti also caught a bid, benefiting from gold's appeal as a safe haven amid all this uncertainty. For long-term portfolios, these names could offer stability if volatility sticks around. On the flip side, the large-cap losers list is packed with tech and consumer names feeling the heat. Amazon and Meta platforms both dropped around 4%, reflecting broader tech sector weakness. Cybersecurity players like Palo Alto Networks and CrowdStrike also took a hit, down nearly 6% each, as fears of AI competition weigh on sentiment. As long-term investors, these dips might be worth watching. Tech often overcorrects in panic, creating entry points for patient capital. Looking at the most active stocks, it's no surprise that heavyweights like Nvidia, Amazon, and Tesla are seeing massive trading volume. Nvidia slipped a couple of percent despite still being a darling of the AI boom, while Tesla also saw selling pressure. These names are market movers, and their action often sets the tone for broader sentiment. For us, it's a reminder to stay diversified. Don't let one sector's swings derail your strategy. Speaking of market movers, the usual suspects are in play. Apple, Microsoft, and Alphabet all saw declines today, reflecting the risk-off mood. But Micron Technology eked out a small gain, bouncing back a bit after recent panic over memory stocks. These big players are the backbone of many portfolios, so their short-term wobbles are worth monitoring, even if our long-term thesis on innovation and growth remains intact. Let's pivot to earnings, as we've got some key reports to digest. Carnival Corporation posted a strong Q1, beating expectations with robust demand and record bookings. Great news for consumer discretionary exposure. Looking ahead, we've got names like Lululemon, FedEx, and Nike on the docket this week. These reports will give us a pulse on consumer spending and logistics, critical indicators for where the economy might be headed. As long-term investors, earnings season is our chance to reassess core holdings and spot trends. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your portfolio. Over the past week, some large-cap gainers have really stood out. Garmin surged over 21%, while Shopify and Occidental Petroleum posted double-digit gains, benefiting from sector strength in tech and energy. These short-term pops are nice to see, but for us, it's about whether these companies can sustain growth over years, not weeks. On the other end, weekly losers include Genuine Parts, down over 20%, and Rivian, shedding 14%. These drops highlight sector-specific challenges, but they also remind us to look for oversold opportunities if the fundamentals still stack up for the long haul. Sector-wise, industrials led the pack this week with a 2% gain, followed by consumer cyclicals. Energy also saw a notable bump, up over 4%, no doubt tied to those soaring oil prices. These moves show where money is flowing in the short term, but as long-term investors, we want to balance cyclical exposure with defensive plays. On the weaker side, healthcare lagged, down slightly, along with utilities and financials. These sectors are often seen as safe havens, so their underperformance tells us investors are still wrestling with where to hide in this uncertain environment. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and be sure to stick with us for daily updates, deep dive SWOT analyses, and all the insights you need to navigate these choppy waters. Hit that like button, subscribe, and we'll see you tomorrow for more actionable market intel. Stay sharp, investors.